Next, we're talking about the financial services space, and we are speaking with Mr. Aseem Dhruv. We have the manager. He's of course the chief at SBFC Finance. Mr. Dhruv, great to have you with us here. Good morning, Prashant. This side, it's been a while since we spoke. I think it was on listing day, and after that, not very much by way of interaction. So this is good. I want to just start by asking you what is on everyone's mind, which is the unsecured lending bit, which the RBI sort of asked financial institutions to raise their risk weights for, and of course the exposure to in that particular segment. So just wanted to get that out of the way. What is your exposure, if any, sir, in that unsecured segment? So let's begin there. Go on.
So we ourselves are a secured lender, and we only lend against the security of property and gold. So the circular directly doesn't affect us in any way. However, when the risk weight has been increased on bank lending to NBFCs, that cost increase will get passed on to us as well.
Portfolio LAP, sir, for you, loans against property? I mean, which you said?
Yes, it is loans against property and gold loans.
So indirectly you will have an impact, right? So have you been able to? What percentage of the portfolio is LAP?
No, basically, LAP is not impacted by that because we are MSME lenders. We are not into consumer lending. Only about 10-15% of our business is lending to consumers, in the sense of lending to individuals. That part could have an extra risk weight. We are still awaiting clarifications, but there could be an extra risk weight in that part.
Okay, so relatively lower impact on that front. Hi, Mrs. Dhruv. Good morning, Nigel on this side. Well, tell us on the cost of funding, though. As you mentioned, RBI is tightening the screws out there for banks lending to NBFCs. So how much does your cost of funds go up by?
So the jury is still out there, but my sense is that a 25 basis point risk increase will translate into a 15 to 20 basis point cost increase. So that will eventually come. It will come with the new lending initially, and then the stock will take a little while to price out. But going 1 year forward, the price has been moved up by somewhere between 15 to 20 basis points.
And how much of your borrowing comes in from banks?
Majority of our borrowing is from banks. We are not very active into the NCD markets. So co-origination and bank borrowings are the two sources of borrowings for us. So majority of our borrowings is from banks.
Okay, majority of the borrowings from banks. The SME disbursement growth was very strong for you, in excess of 25% year on year. What kind of overall disbursement growth are you looking at by the end of the year?
So we came on for a very small base, so the percentages look very high. But I think that on a sustainable basis, a 5-7% quarter-on-quarter growth looks a little more sustainable for the near forthcoming future.
5-7%, that's for SME disbursements.
Yes, that's the quarter-on-quarter growth on the AUMs is what on.
Okay, quarter-on-quarter growth on AUMs. But your average ticket size, is there scope to increase that further as well? I mean, it's grown about 3.2% quarter-on-quarter. I mean, there has been a growth. I don't know the year-on-year numbers, but quarter-on-quarter, the average ticket size has gone up. Is there scope to increase it further?
No, every ticket size will remain around ₹1 million, plus minus, a little bit here, a little bit there goes. But largely, it will remain around ₹1 million. That's the segment that we are targeting. And that's where we are getting our best, RAROC, returns. So we will keep the average ticket sizes around the ₹1 million that we are. Increasing the ticket size takes us into a different segment of lending where we have a risk of adverse selection, with banks playing in that segment.
So is your focus more on customer acquisition now, or are you also planning to increase your presence geographically?
We are in 16 states, and at the moment, we have covered 25% districts in these 16 states. We will go deeper in these 16 states over time. So eventually, we'll get into 60-70% districts in these 16 states. We are not going to go beyond the 16 states as of now, but we will go deeper. We'll penetrate deeper in terms of geography. So we operate generally on a hub and spoke model where we have hubs, and from the hubs we reach out to. So we are in 171 branches. From these 171 branches, we reach out to about 250 odd locations. As the locations mature, they become hubs, and then we open spokes from there. So it's a slow model. We generally open about 20-25 branches a year and intend to be at around these levels.
Asim, how's competition? I mean, one of the USPs when the IPO also came, I remember speaking with analysts, etc., was that you operate in, the formal self-employed segment where there was not that much. I mean, so it was a bit of a niche. Or is competition picking up? I mean, when one talks to NBFCs, it looks like everyone wants to do everything. There were sector champions earlier, which is they still are, but it's now big. Everyone is getting, into pretty much all segments.
Yeah, financial sector is a funny business in two ways. One is that there is no brand that anyone really has. Unlike what happens in a soap or a shampoo, people don't reach out for a particular brand. When they go out for a loan, they want the cheapest loan possible. So one is that it has very low entry barriers, and therefore everybody ends up doing everything eventually. And in the end, there are only two forms of loan, secured and unsecured. And there are only two forms of borrowers, individuals and businesses. Now, within that, you can cut it one way, you can cut it the other way. But essentially, what we have seen about this business is that while everybody does the same thing, they don't get the same result. So the only real moat in this business is execution and what you do within execution. So competition in this segment has always been there. There are 8,000 NBFCs, there are 400 odd banks, regional rural banks, small finance banks. There are cooperative societies. So competition, there is an informal segment as well. So competition in the segment has always been there. But the larger trend is that the market is migrating from the unorganized format of finance to organized finance. So there's a huge shift that is happening down there. And that is a wave that we are trying to catch. So the competition in this segment, will be there, will increase, new players will come, some existing players will exit. This drama will continue. But if you execute well, there is enough for everyone.
Okay, all right. Mr. Dhruv, since you said the cost of borrowing could go up a little bit, taking that into account, what do your NIMs look like? Is holding above 9% now. You want to give us a broad range. And given that you're looking at your AUM growing by 5 to 7% on a quarter-to-quarter basis, by the end of FY25, AUM should be around 8,000 crores, $1 billion approximately?
So we are fully floating in terms of rates. 92% of our portfolio is floating rates, and it is marked to our cost of funds. So as the cost of fund increases, we pass on the cost of funds, and our spread remains constant. So we would not be directly affected by any increase or decrease in cost of funds. Our model needs the spreads of 7% and NIMs of 9%, and that will more or less remain where they are. No change there. We don't give forward guidances on growth, but at the moment where we are, a 5-7% quarter-on-quarter growth number looks very, very achievable.
Okay. One final question on asset quality. You briefly mentioned it earlier, but just wanted the numbers. This time your asset quality has improved. Where do you think you can end the year with in terms of gross NPAs?
So we would be around these levels. We don't see any material change from these levels. We would be around these levels. And broadly, we are operating on a thesis where our cost of credit would be about 80 basis points to 100 basis points in different market cycles. At the moment, it is just under 80 basis points. So broadly, we think that there will be cycles, and the MSME is a difficult segment to deal with. And one of the reasons why there are a lot less competition in this segment is that it's a lot harder to execute in this segment. We think that we are still 6 years old. We still have many more cycles to go through before we stabilize. And we think that if we are able to hold the credit cost to these levels, we would be pretty happy with it.
All right, Mr. Dhruv, we'll leave it there. And execution is what people are sort of excited about with you at the helm. Thank you for joining us with that perspective on SBFC, Small Business Finance. Markets, by the way, taken a dive. So the Nifty